Conversation between shareholders and accountant. Real situation. Tax reduction strategies. Shareholder 1. Mr. Accountant, considering our profits increased this year, is there any legal strategy we can implement to reduce the impact of the income tax payment without risking penalties from the DIEN? Shareholder 2. Yes, perhaps something related to deductions or reinvestment in the company? Accountant. We can reinvest part of the profit in technological upgrades or R&D projects, which are deductible under Colombian tax. Financial statements analysis. Shareholder 1. When analyzing our financial statements, I noticed an increase in administrative expenses. Can you explain what caused that and if it affects our taxable income? Shareholder 2. Exactly, we need to understand if those expenses are deductible or not. Accountant. Most are deductible, but we must verify that all invoices meet DIAN's electronic billing requirements. Income tax return details. Shareholder 1. When preparing the company's income tax return, what's the most common mistake that could lead to a DIEN audit? Shareholder 2. Yes, we want to avoid any inconsistencies that could trigger penalties. Accountant. The main issue is reporting income differently from accounting records or missing supporting documents for deductions. Tax planning for next year. Shareholder 1. Based on our projections for next year, how can we structure our expenses to make the most of tax deductions and incentives? Shareholder 2. Especially considering possible tax reforms that might limit those benefits. Accountant. We should prioritize deductible investments, such as training, digital transformation, and environmental sustainability projects. Cash flow and taxes. Shareholder 1. We have strong sales, but our cash flow remains low. Could the timing off tax payments or withholdings be affecting liquidity? Shareholder 2. Maybe our tax advances are too high. Accountant. Yes, prepayments and withholdings can reduce liquidity temporarily, but they reduce the final tax to be paid. Tax reform impact. Shareholder 1. How does the latest tax reform affect the corporate income tax and dividend payments? Shareholder 2. Will we have to retain more tax when distributing profits to shareholders? Accountant. Yes, the reform increased the effective rate on dividends and limited some corporate deductions. Audit preparation. Shareholder 1. The DIEN notified us of a tax review. What's the first step we should to prepare? Shareholder 2. And how can we make sure all our accounting documents are in order? Accountant. We'll verify each supporting document, confirm electronic invoices, and prepare a detailed explanation of all deductions. Legal versus illegal tax actions. Shareholder 1. Sometimes we hear about companies using creative accounting. Where's the line between tax planning and tax evasion? Shareholder 2. We want to optimize taxes but keep everything transparent. Accountant. Tax planning uses legal alternatives to reduce taxes, while evasion involves falsifying data or hiding income, which is illegal. Deductible vs. Non-deductible expenses. Shareholder 1. Can we deduct travel expenses related to business expansion even if the project didn't succeed? Shareholder 2. What if some receipts are from abroad? Accountant. As long as the expenses are linked to the business and properly documented, they can be deducted. Withholding tax. Shareholder 1. Can you explain how retention at source affects our income tax throughout the year? Shareholder 2. Do those retentions reduce our final tax or are they separate obligations? Accountant. They're prepayments. They reduce the final amount payable at the end of the fiscal year. Tax penalties. Shareholder 1. If we make a mistake in the return and Dian detects it, do we have time to correct it before getting a penalty? Shareholder 2. And what's the usual fine if we file late? Accountant. Yes, we can file a corrected return, but the fine depends on how late and the value of the correction. Shareholder 1. Our profitability ratio increased, but the liquidity ratio dropped. What does that mean for our financial stability? Shareholder 2. Should we worry about short-term obligations? Accountant. It means we're profitable, but cash management needs improvement. We should collect faster and delay non-essential expenses. Asset depreciation. Shareholder 1. How does depreciation impact our financial statements and tax base? Shareholder 2. Can we accelerate depreciation to reduce taxes? Accountant. Yes, within limits. Accelerated depreciation is allowed for some assets under tax incentives. External audit. Shareholder 1. What's the main difference between an external audit and a tax review by Dian? Shareholder 2. And which one has more legal implications for us? Accountant. The external audit is independent and focuses on financial accuracy. Dian reviews focus on compliance and taxes. Exchange rate impact. Shareholder 1. How do currency fluctuations affect our tax calculations for foreign transactions? Shareholder 2. Should we record gains or losses monthly? Accountant. Yes, they must be recorded monthly, and they affect both financial and tax results. Deferred taxes. Shareholder 1. Can you explain in simple terms how deferred taxes help balance future tax obligations? Shareholder 2. Sometimes I see them as an expense, sometimes as an asset. Accountant. Exactly, they can be either. They represent timing differences between accounting and taxable income. Dividend distribution. Shareholder 1. When distributing dividends, how do we determine the amount subject to withholding tax? Shareholder 2. And what if the profits come from different fiscal years? Accountant. We calculate based on retained earnings per year and apply the rate in effect for each period. Tax refund delays. Shareholder 1. Why do tax refunds from Dian take so long even when all documents are correct? Shareholder 2. Is there a way to expedite the process? Accountant. It depends on Dian's verification process. We can request priority if the company meets certain conditions. Ethics in accounting. Shareholder 1. As our accountant, how do you ensure transparency and compliance in every financial report we submit? Shareholder 2. We want to maintain the company's reputation and avoid any legal risk. Accountant. By following NIF standards, tax laws, and keeping full documentation for every transaction.